Fine. Hello, Intuit. How are you doing? Hey, I've logged in. We're picking up right where we left off. Here comes our screens. What we're doing, I'm looking at the tax trial balance for this superhero demo supply company. Just like I mentioned before, I can click on this, pull it down, change from one client to the other, and that can include QuickBooks Desktop, something came in Excel, any accounting software, all can be all consolidated together. I can combine those entities, if it, across multiple entities to create consolidations just by dragging and dropping. Real simple to do. But to onboard this client, what we did, this kind of thing we're talking about is getting ready for a tax return and try to do it in 10 minutes. I click this one button, gathers the data, and does everything up to here that you see on this screen in 90 seconds. Right? It's also going to identify all your fixed asset additions. It's going to identify things in Ask My Accountant. It's going to pull all of those things out so you can find them quickly, but you bring it in and it's going to do some mapping when it brings it in to say that all these prepaid accounts obviously go under prepaid expenses. And I've already mapped this prepaid expense item to go to the 11, where it goes on 1120S. I've already mapped it because this item here, just so make sure we're clear, this prepaid expense, this is inside once. It's already set up. It's ready to go. These are the client's accounts, right? They don't have account numbers. You can tell they're in QuickBooks Online. They don't have account numbers. We don't care. There's no accounting standard for account numbers. So we put them in this prepaid. It's already mapped to go to the right place. And we can map it to say, I want to automate the book to tax adjustment by saying something like prepaid rent, more than AR and AP being cash basis. I got to reverse prepaid rent. I got to make adjustments for depreciation, things like that. And I can make my adjustment, mark it, say it's tax significant, that I want to automatically reverse it. So I have zero to go to the tax return. Now I do this one time, I never do it again. So we update the data and this happens exactly the same. Never changes the client balance inside QuickBooks Online. We just store these tax transactions in the cloud, merge them together. Now I've got a tax scenario that I can actually take this process and make budget scenarios. Everything's scalable. Everything is built around a Lego, and I can take a Lego and play with any other tool I need to do, right? So at the end of the year, really simple to go from client balance to tax balance. I close a client's books in the second year they've been inside it once, and we've been keeping up with the alerts, and so I'm done. I close their books. I make my last adjustments. I hit gather data. 90 seconds later, it's in. I push ready to file. 30 seconds later, it's in Lacert. 2 minutes to go from book to Lacert with absolutely no effort. As it's coming out of the box, it is ready to do that today. As soon as we start onboarding clients, that is a ton different time. And so when I said 400% before, the idea that I close the books and start and bring this over and have to do all of this grouping in Excel or have to run it through some other software. I have to add account numbers. I have to do all of these extra steps. And then I have to do it again the next year. I have now taken all that time I did from before. I've automated most of it. I've made it so the tax significant entries are done. And now I'm able to close and get the tax return done instantly after year end. Again, sticking in that simplify. Remember, I had 4 checkboxes. Simplify, that was the simplified method of getting the data in, the simplified method of having everything grouped up. But what if something doesn't end in the right bucket? So again, now I'm looking at my group numbers on the left side here, and you can see I've got professional fees. There are 8 client accounts from the customer inside QuickBooks Online that total $1.69 million that we automatically map to go into professional fees. And we run through our rules engine and get through with all the expenses. Can't find a bucket for an account, then we put it in other operating expenses, which I've selected here, and you can see video production cost in there. That is white noise to me. It doesn't mean anything, but I know this client pretty well. So therefore, it's going to go in marketing. That's where I've always put it in the past, or that's where I want to put it. I learned that. Then I just type in market in the search bucket. It's going to find my marketing bucket. There's 3 accounts for $1,770,000. I don't know if you saw, I had 2 accounts in this other operating expenses for $16,000. All I got to do is click on that video production cost, drag it over to marketing, and boom, it's going to go from 3 to 4. And I've got the and video production cost is in here. I never have to do this again. It is that simple. We have barely touched the surface on what's happening and what else you can do inside there. We didn't really walk through creating the journal entries because we're going to talk about what you need. So every trial balance in the world has got an account and it's got a balance in it, but I don't need a balance for fixed assets. I need to know the additions. So I want to double click on that number and get the additions directly out of here. So here's all my beginning start of year balances, right? So I can see all of my beginning balances, but they added a $932,000 asset. So I can see that. That's the kind of thing I need if I want to know while I'm working on the tax return, why is this number so big? I don't have to go back to QuickBooks Desktop. I don't have to call the client and ask them anything about it. And from here, I can make a TJE to take Section 179 if I wanted to, or I can make a journal entry. There's better ways to solve that than working on it here. And that's what you'll see next, right? The alerts, because that's kind of working like trying to do the analysis afterwards. But I've got an alert that's going to tell me here on the alerts tab, you got a fixed asset addition. Now I can fix that the same way. I can push it over into the fixed assets. I can make the journal entry for book depreciation, make my tax adjustment for tax entries, do all that right here from this screen without having to go back into QuickBooks or anything like that, because we do have drill down details. So then I've got an alert for transactions that need attention. Okay, so that's Ask My Accountant, opening balance equity. Those are those accounts that we've got. So somebody put that in there. They set up a new loan. And when they set up the loan, there's a box in there that says, what's the beginning balance? QuickBooks is talking about the beginning balance from the beginning of when they opened up the QuickBooks file and you set it up the first time. We're talking about the beginning balance of opening. They're talking about the beginning balance of that loan. But when you do that, QuickBooks just creates an entry that's going to put $47,000 in opening balance equity as a debit, and it's going to credit the note account. So we see that debit, we create the alert. You can click on this, open it, reclassify it, you're done. Or, hey, I want to track what I'm doing. So I can make a TJE. No, I don't want to do that. I want to fix the books. I don't want this to stay in opening balance equity. So I make a journal entry. Is it an adjusting entry? Yes. Okay, we'll do that. It's automatically going to credit this account. Then I just pick the transportation equipment. I post it. And most importantly, I'm doing that this year. I don't have to wait till 2026, March of 2026, or September of 2026 to add a January of 2025 transaction. It'll tell me on January 11th, this happened yesterday. That's how we're talking about when you need it. We're not waiting until right before the deadline. You solve it now. Now I fixed it in the workflow and it's fixed for the tax return. Obviously the chart of accounts changed, but maybe they added something, they added the new note, but maybe they added research and development. Maybe they did something like that. This is going to tell us that as well. And then here's the biggest one that's really made a huge difference is the account balance that changed in the closed period. That's a huge alert, right? Cash went up by $500. Professional fees went down by $500. Hey, tell me that happened yesterday, because that's going to happen 10 times, even if we lock a file inside of QuickBooks. Now it's going to say, okay, I filed the tax return. Here's the balances went to the tax return. And every day when we gather the data, if any of those numbers change, we create this alert that tells you it's in here. Again, you got a simple workflow to get that fixed inside there. We can create customizable alerts as well, like for estimated tax payments and expense, move those to distributions, political contributions, inside charitable contributions, move that to one of those, to what we call an M1 category account. We don't put that on the client's chart of accounts, but we give them accounts to make tax adjustments with. So all I done, and then finally that last piece where I said, hey, we don't want the hood on it, right? We want you to be able to open up the hood. Well, I said, we're not going to put a hood on ours. And so this is how that's going to work. And I'm going to talk about an account like payroll taxes, right? So it's going to run through this rules engine and go through the taxes, federal income taxes, state income taxes. It hits the payroll taxes rule. It says, isn't it an expense? And then if yes, then it says, does it include PAYR and tax? If yes, and it's expense, we're going to put it in this bucket. Or does it include 941 or 940 or FUTA or auto, whatever, all right in here. If I wanted to add something, I just type it in, hit enter, and I've got a new or to go inside that group. And then finally, or does it include SOC and security? That way I've got social and social security, however they put it in there. So if I see those things in an expense, we're going to put that in payroll tax expense. You saw how easy it was to move it if that's not the bucket it goes into, but it runs through them all. We get done, everything else goes into tax. I'm just looking for the word tax. I'm also looking for a permit or license. So I have tax because that goes in that taxes and license bucket. I'm cranking along, using this inside my firm. I've got a couple of beta users that have worked, that have been using it, and we find the problem that tax prep is ending up in this tax bucket. So we just added a rule, just stuck in a new card that says, does it include tax or prep? And now put that in professional fees before we get to the tax rule, done forever. Go on another couple of months, we sure enough hit taxi was going in there. So we put taxi to go to travel expense. We solved that one time, not for every one of my clients, not for every one of us, but for everybody that uses once. Solve it one time, and from that point forward, it was done forever. Easy to add new rules, easy to customize from there. Finally, we've got the how the mapping works. Try to quickly go through this. We're coming right up on 10 minutes now. I've got advertising, That's going to go to other expenses. This is the tax bucket that we call the tax grouping for advertising. For partnerships, it doesn't go on the first page, but for individuals, S corp and C corp, it's all got a specific line that it goes to on the face of the form. So line 16. I've already mapped all those, and we've already told them we've already associated each of these with the right series inside of Lacert. So when they put something in advertising, it automatically knows where to go for any one of those forms. If you want to add a new lead, you just click on that button. You're going to quick little dialogue to add the advertising, and then pick your form numbers. You're done. And then if you need to go ahead and create a whole new set of leads because you've got some other things you do for a client in a particular, for clients in a particular industry, or you want all your financial statements to be in the same format, great. You can use this tag. You can use that. Create a standard set of leads, and when you bring in a new client, he's automatically going to get set up to be formatted for your financials in the way you want to do it. These are Legos. Everything works with everything, just like we've talked about before. As you can see, we're a little bit unique. We're not trying to replace QuickBooks. We're just trying to replace all of those wasted staff hours between QuickBooks and Lacert. And would love to work with you guys on how to make this thing a reality for CPAs.